Disney now has raised its bid for Fox to $38 a share. Later today, the board of 21st Century Fox is going to be meeting to review Comcast's $65 billion offer to buy most of its assets. But in the meantime, Fox has already made a new agreement with Disney, accepting their much-upped bid. Joining us now on the telephone is Craig Moffett, Moffettnathanson founding partner and senior research analyst. So, Craig, thank you so much for being with us. This is quite a bold bid by Bob Iger. It was not shy.
Yeah, you're right. There was a lot of speculation that Disney's bid would come in on top of or even a little below Comcast because, in many ways, Disney is presumed to be a superior bid, in part because it's more tax efficient for the Murdoch family, because it's stock rather than cash. They've preserved the option of taking all stock, which presumably is a nod to the Murdochs. But they went ahead and meaningfully topped Comcast's bid as well. So now the board of Fox has already said this is the superior bid, and the ball is back in Comcast court to see whether they want to top.
So can Brian, how much can Brian Roberts really afford? I mean, he's got a fair amount of debt in his balance sheet already. He was all cash. So what do we expect now from Brian Roberts?
Well, the balance sheet was clean, arguably too clean for most investors' taste before all this started. But you're right, there is a clear limit because of their commitment to not issue any stock with their shares trading at a depressed level. So they have to do it all with cash, and therefore there are clear limits. Now, that said, some of it depends on what they decide to do with some of the assets. If they decide they want to sell some of Fox's regional sports networks, which would not only help raise cash but also would reduce some regulatory friction, then they would presumably be able to go a little bit higher with the expectation that they'd be delevering quickly after that.